Be seated, delegates. Welcome to the second day of the NCA forum in the eve of Women's Day. Can we just have yay to all women? Thank you so much, and we are starting up with our the sixth session. And before we can start up, I just want us to reflect on yesterday's sessions, and I would like you to turn to the person next to you and just share what you have learned about yesterday and what are you looking forward to today. So on the Mentimeter sheet, there's a question that you need to reflect on. Kindly reflect on what was discussed yesterday. What is one thing that you found particularly memorable or impactful about yesterday's session? This can be an idea that you fully resonate with based on the discussions of yesterday. I'm just going to give you a minute to turn to the person next to you and just have a conversation about yesterday's event and what you have learned, what are you looking forward to. If you were not here yesterday, you can just talk about what you are looking forward to in today's sessions. A minute starts now, and I would like to see you turning to the next person and have a conversation. For those who are working into the room now, we are having a conversation with our neighbors and asking them how did they find yesterday's session. What you have learned and what you are looking forward to today. Thank you so much. You only had a minute. I hope you had some good reflection about yesterday. And now let's just move to the sixth session. We are moving to the sixth session on mainstreaming of biodiversity into the financial sector. And I would like to welcome a good friend of mine, Ms. Deshni Pillay from the UNDP. Deshni Pillay is the Nature, Climate and Energy Portfolio Manager at the United Nations Development Programme. She was previously the Chief Director responsible for biodiversity information and policy advice within the South African National Biodiversity Institute. She has led several portfolios and diverse team of policy practitioners and project implementers that provided policy advice and support to the Department of Forestry, Fisheries and the Environment. She has also worked in numerous programs that deals with mainstreaming of biodiversity into various sectors, also involved on mobilizing biodiversity information for planning and securing strategic water source areas in South Africa at both national and provincial level. Prior to joining SANBI, she was employed by the South African Parliament as the content advisor to the Select Committee on Land and Mineral Resources, providing policy, content, and oversight support to the Parliamentary Committee. She also served as in the Project Steering Committee for the Biodiversity Finance Project in South Africa. Ms. Pillay, you are welcome and take the stage. And as we clap for her, thank you.
Thank you very much. I didn't know that bio takes so long to read. So we've got quite an exciting morning planned, and really this is the brainchild of the organizing committee of the forum to pull together yesterday's work on natural capital accounting, and then really look at today how we're mainstreaming that into the financial sector. So I've got a few slides. So we're just going to have a quick overview for those that missed yesterday, what was covered. So we heard quite a lot about the various natural capital accounts that have been developed. We also really reflected on the methodology. There's also strong support from the Stats SA, and you would have heard from all of the other countries that are also producing these accounts, that having the statistical officers really leading and pushing this work forward. Also, we reflected a bit on how we managed to take NCA into advising on policy, providing some policy advice, and then also really reflected on the data that goes into developing these accounts, mainly at national level. And now we're going to be really working with what came up from yesterday and look at how we're going to be taking it forward. So today's session is really going to be looking at the corporate and financial institutions, how we manage to take natural capital approaches. So taking that methodology that was used yesterday, and how do we actually take it into something practical within the corporate and financial institutions. So we are going to be hearing from different actors in the financial sector in the panel discussion. And I want you to also start reflecting a little on the Kunming Montreal Global Biodiversity Framework. There's Target 14, where we've really been pushed and asked to see how we're engaging with multiple values of biodiversity. And several of you may be involved in different aspects within the biodiversity sector, but the ask for today is really to look at what we need from the financial sector. So this is a complicated model, and I'm not going to scare you by going through it. There is a paper, there is something that Amy can maybe share at some stage. But I wanted to just highlight that the top box, that's what we spoke about yesterday, really looking at the SEA, the SNA, how natural capital accounts can feed into policy. But today, we'd like to focus on the other blocks, specifically the natural capital policy and finance mechanisms, and how we manage to pool all of that to secure natural capital for the benefit of people and nature. And that, of course, links quite nicely with the Global Biodiversity Framework. This comes from a global project that's called the Stanford Natural Capital Project. So if you want more information, there is, Amy does have the the abstract, I think, there's a summary of the model. The other thing that we want to just reflect on is really, if you look at the framework that I presented in the previous slide, and look at this, the infographic up here, really it's asking of us how biodiversity contributes to the financial sector, but then also how can the financial sector contribute to biodiversity. So there's quite a lot of work that's been happening in the climate space, climate finance. They've really taken the work forward, and I think a lot of the financial institutions have also started engaging with climate finance. But we've been a bit behind in the biodiversity sector, and really what we're wanting to look at is how do we manage to mainstream that. And then lastly, what the GBF actually asks of us and the Sustainable Development Goals is really looking at this whole of society, whole of government approach, and leaving no one behind. And if you remember, Dr. Makulela Tsipang also reflected a bit on that in her presentation yesterday. Okay, so today let's look at what are the differences and opportunities. So we have natural capital accounting, the SEA, the whole system, and then we have natural capital approaches. And that's quite a practical way of mainstreaming biodiversity into the sector. I think the key things we're wanting you to look at is what are the ways in which they may be mutually beneficial. So benefits for the biodiversity sector, benefits for the financial sector. So there's quite a lot of questions here, but it's really just for you to start thinking about the day that's going to unfold and how we're going to be taking that forward. And of course, you'll have the panel discussion as well, and then you can ask your questions. And then lastly, as we move into today, let's just listen and ask ourselves the questions, just to reiterate, what are the opportunities for us to connect to each other's work, and how do we do more together? Also, to reflect a bit on the transformative potential, and really focusing on how the funds will flow, where and how they will hit the ground, how information from corporates might enhance national data sets. So I think that's the key thing for us. There's a lot of data sitting in the financial sector, and how do we bring it into our sector, and how do we make meaning out of that data? And then important to see who's involved in the conversation, who's here, who's not here, who do we need to bring into the conversation. I've mentioned already quite a lot of work on the climate finance space. I think we can learn a lot as a biodiversity sector from that, but especially since South Africa will be hosting the G20, or take over the G20 presidency as of December this year. Climate is very high up on the agenda, and we need to see how we also add the biodiversity into that space. I know Brazil has put together a concept note on the bioeconomy for the G20 discussion, so it'll be interesting for us as our sector to really start engaging with that. And then, of course, UNDP will be supporting the South African G20 presidency, so there's lots of opportunities for discussion. There's various engagement groups, consultative groups, work streams to engage with. Okay, so I think that's it for my presentation. I'm just going to invite the panel to join us this morning. So we have 4 panelists, and really what we're going to be looking at this morning is how do we effectively mainstream into the biodiversity sector, into the financial sectors? How do we mainstream biodiversity into the financial sector? So the integration of biodiversity into the financial sector is, of course, a crucial step in sustainable development and economic stability. And we heard a lot about this yesterday. When we reflect on the Global Biodiversity Framework, it's also really how do we bring all of the different dimensions together. So the panel discussion this morning is really aimed at incorporating biodiversity, our biodiversity work, into the sector and really look at the impacts of environment and the economy, but also looking at the social aspects of it. So we're going to have quite a diverse group of panelists, and I'd like to just invite Ms. Santesa Raghavelu. She's an associate climate economist at the Economic Research Department of the South African Reserve Bank. She holds a BA in politics, philosophy and economics, and a BCom in economics from the University of Johannesburg. And then very recently she completed her MSc in global public policy from SOAS, University of London, and her research focused on the impact of climate change on inflation dynamics within emerging markets and developing economies. So really excited to have you here, Santesa. Please have a seat on the couch. The next person I'd like to invite is Johan Milan. So Johan serves as an investment banking principal in the Sustainable Finance Solutions team at Nedbank Corporate and Investment Banking. So Nedbank CIB. He has over a decade of experience as a banker and an advisor, and his passion for driving positive change through sustainable finance has been influenced by living in the Nordics for half of his professional career. His experience includes structuring and coordinating debt transactions and integrating environmental, social, and governance factors into data management, disclosure processes, and risk modeling. So welcome, Johan. Please take a seat. Okay, and then the next up, I have Yassine Lockhart. So Yassine is a sustainability specialist with a focus on sustainable finance and climate risk. He holds an MSc in development planning from the University of Witwatersrand and has been with the Banking Association of South Africa for the past 5 years. So Yassine provides strategic support to banks with a view of shaping policies and frameworks that mitigate climate-related risks and promote sustainable development. So as a member of the Climate Risk Forum with BASA, he's also, which BASA is a secretariat of, Yassine has been responsible for most of the organization's work in this forum and represents BASA both at local and international platforms. So Yassine, you've got a passion for sustainability. Please welcome, have a seat on that couch. And then lastly, of course, we have Dorothy, and she comes from Anchor. I can't see my bio here, but Dorothy, you don't need too many, you don't need a long bio. She's been leading the, is it Anchor? Africa Natural Capital Accounting Alliance. So Dorothy, we're really looking forward to having your insights shared with us this morning. And then also, I'll give you a few questions to reflect on, but also the work that you've been doing with the African Development Bank. I think really excited to share what's happening in that space. So let me take my hot seat, and then we can get this panel discussion on. So check that all your mics are working. Okay, so just to note that we have timekeepers in front here. We have until 10 o'clock for the session here. So I'm going to be posing a few questions, and then if we are given enough time, there's a third question that I'd like to just also add into the discussion. So really today what we're wanting to do is to understand the significance of biodiversity in the context of financial stability and economic growth, and that is why we've invited you, this diverse group, this morning. And for the audience, I really want you to reflect on the economic value of biodiversity and ecosystem services, including ecological infrastructure, in terms of employment, economic activities, and then our direct dependence on biodiversity. So the first question, Santesa, I hope you're ready. I want to ask you is, how does the Reserve Bank perceive the risks and opportunities associated with biodiversity loss in the context of financial stability?
Thank you. First, I just want to start by saying thank you to Sambi and DFFE for the invitation, specifically Amy and Jennifer. Really happy to be here. So I want to start by explaining a little bit of the economics. So how does biodiversity loss, or how could it lead to financial instability? And I think we can start by thinking about our daily lives. So us as humans, we need ecosystem services to survive. And ecosystem services can provide us with a myriad of things, including food, so this will be tangible goods, timber for example. Then we have supporting services like nutrient cycling, which we need for our soil to grow our food. We have regulating services like climate control. And then, last but not least, we have cultural services. And I think this, as a country as South Africa, is really important for our communities. It's important for tourism. It's important for recreation. So the ability of nature to provide these ecosystem services depends on biodiversity. So if there is a depletion of nature, it's going to lead to biodiversity loss. And in South Africa, our primary and secondary services are extremely reliant on these ecosystem services. And I just want to read to you some statistics that came out of the AFD study that was done with SAMBI and DFFE and a lot of other stakeholders, including, I think, the Development Bank and also the South African Reserve Bank. So they performed a exposure assessment in 2023, and they found that almost 70% of consumed goods and almost 80% of exports are produced by sectors that are highly dependent on at least one ecosystem. They then found that at least 10% of loans held in South African banks and their portfolios represents 1.2 trillion, or 24% of GDP, and are highly dependent on at least one ecosystem. I heard you had a very interesting discussions about water dependencies yesterday, which I'm really sad about that. But if I could take this down a little bit further and narrow it to a specific sector, we can talk about water dependencies. So in the same study, they found that 22% of South African exports are produced by sectors that are highly dependent on water provision in municipalities that are sensitive to water shortages. And these municipalities specifically are in Limpopo, in Mpumalanga, Free States, Eastern Cape, and the Northwest. All of the provinces which we know are drought-prone. They also found that South Africa exhibits a dual characteristic. of being exposed to water scarcity and at the same time have economic activities that are highly concentrated on water resources. So those are really some, I don't know, extraordinary statistics, and it's quite scary if you think about it at the rate we're going with the severity and frequency of extreme weather events. So taking it back to the question that you asked, when these impacts on economic activities occur, it's going to occur in two channels within the real economy. It's going to occur in the microeconomy, which will affect houses and businesses, and then it's going to affect the macroeconomy, which is then an impact on prices, trade, investor sentiment, for example, productivity, capital flows. And I think when it comes to financial stability, what's more concerning is there is a potential for systemic risk. Now, systemic risk is when there is failure, not in one particular channel, but it moves through all the channels within the economy. So it will go from the real economy to the financial system, and there may be feedback loops. Okay, first there may be contagion risks within the financial sector. So for example, strategic risks may overlap with operational risks, may overlap with underwriting risks, and then there might be feedback loops back into the real economy, thus creating the systemic risk. So let me just summarize. Biodiversity loss is a potential risk to financial stability, and it is therefore within the mandates of central banks to assess and understand these risks, because our mandate in the South African Reserve Bank is to preserve price stability and financial stability. That's just our compass. There's a line that I like by the IMF, and it references central banks and financial supervisors, and it references us as the gatekeepers of the financial sector and preservation of financial stability. So just to wrap up, in this case, the impact of biodiversity loss, there's a couple of opportunities here for us to start with. And we can start with the low-hanging fruit. We can go from passive to aggressive. And there are central banks that have more aggressive approaches because they have expanded mandates. These banks include the ECB and the Bank of England, for example. So for banks that are really in the infant stages, we can start with bridging data gaps. And Deshni talked today about high-quality data. And this in turn will help strengthen our disclosures and the guidance that we can give to financial institutions. Then we can start incorporating nature-related reporting into our supervisory processes so we can better communicate our expectations to our SIFIs, our systemically important financial institutions. And last but not least, we need to increase our capacity and our expertise across the board. And what I mean by that is not just within the South African Reserve Bank, but within all the policymakers in South Africa and in SADC. So we do have, I'm just going to add a little side note here, but we do have a climate change skills program in the South African Reserve Bank, and it starts with very general information like climate change 101, the climate lingo, all the way to the very technical modeling and stress testing training, and it is open to all policymakers in South Africa. And what I'm going to do is I'm going to send a lot of links to Amy and Jennifer so she can share it with everyone. We actually just hosted a workshop with the IMF 2 weeks ago. They came to South Africa and they showed us their disaster modeling frameworks and how we can modify it towards our own country characteristics. And all those three opportunities that I just listed is something that the South African Reserve Bank is actively working towards, and I'm going to stop there.
Thank you very much. You note that I didn't stop you because you were saying really exciting things, and you started off very interestingly with referencing the AFD study that Sandy was involved in. So really, really well done to the EI for Water Security team, because we actually already started the mainstreaming here. So well done. The next question is going to be for Dorothy Maseka, that leads in nature finance and TNFD work at Anchor. So can you share some examples of successful initiatives where natural capital accounting has been effectively integrated into financial decision making?
Thank you very much for this opportunity, and I think, I'll take maybe a minute or two just describing the work that we do at the African Natural Capital Alliance. It's an advocacy program that sits within Financial Sector Deepening Africa, that's FSD, which is a UK-funded specialist development agency. And particularly, Anchor then serves the purpose of bringing various parties together. And so within the platform, we have financial institutions making up maybe around 75%. So how it started was that Anchor was set up to help financial services, insurance companies, fund managers, banks to understand nature, because nature is pretty new. And so over time, then we realized that these financial services were speaking to themselves. So they were talking about capital and new instruments and new products and new solutions, but they didn't have the background in terms of conservation and biodiversity. Very few banks have ecologists. In fact, it's only now that we are having a number of banks, bringing on board chief ecology officers or chief sustainability officers with, botany or ecology experience. So it's pretty new. And so with time then we brought in conservation agencies. We've also brought in let me call them the demand side in terms of project developers. So these are carbon credit or biodiversity credit project developers, or even conservation projects that need investments and need funding. So now we have a pool of around 75 institutions that are fully committed to the nature agenda. And I think one thing that I want to mention is the key target is how to pull in finance into nature. So that it's no longer just talking, we're no longer just talking about we need to do this, we need to do the other. But it's about which financial institutions are willing to invest in nature, which financial institutions are willing to raise bonds, conservation bonds or other bonds, which financial institutions are also willing to report and disclose on nature. And so that brings me to a piece of work that will kind of link into one of the questions that you asked. So under that, in terms of risk reporting and opportunities, specifically under nature, we've been running TNFD pilots. That's a task force on nature-related financial disclosures. So for us within financial services, it's the closest, or it's the gateway to getting to start looking at nature. Because then it means that as financial institutions, you begin to understand the risks, your exposures on nature, and how nature also affects your business. So we've been running a pilot, 21 financial institutions supported by Oliver Wyman, and what we've been doing through that is to support these 21 financial institutions, largely banks and insurance companies, some of the largest within the continent, to begin their first disclosures on nature. And so now they understand, when they're taken through the process, they understand the risks, they understand, more importantly, the opportunities. And through the opportunity side, then they're also looking towards products and solutions that actually would, take into account nature. But linked to that piece of work, I want to touch on one other aspect. is we've also just completed a central bank stress testing exercise for 5 African countries. Unfortunately, South Africa was not part of it, but I mentioned because it's important so that we all understand that the financial sector is taking nature very seriously. This report was launched in May. You'll find it online. We launched it, McKinsey and Vivid Economics supported us in this, were the technical partners. And if we look at that report, we look at it in terms of 3 scenarios, 3 GBF-aligned scenarios. One, where the current policies do not do anything about nature. That's one scenario. The second scenario is where there is an orderly alignment, where businesses actually begin to take into account nature and begin to work consciously towards nature. And then a disorderly alignment to the GBF is where there are policies, yes, but businesses do not do much. So some businesses begin to look at it, begin to incorporate nature disclosures or nature discussions, or even using data to actually analyze their portfolios, and some do not. If you look at the report, the results of that report, we find that by 2050, there's an expected credit loss of around 21%, increase in the expected credit loss of around 21% up to 2050. And if you look at certain countries, then you even see rates of up to 32% increase in losses, which will affect some of these countries. So the report is online. You can look at it at your time. But why I'm bringing all this is to answer the question: what are some of the successful scenarios that we see have incorporated natural capital accounting? I want to say there are very few that we have come across. Of course, that is disappointing, but it is the truth in the context that we have been working with a number of financial institutions, and it is only now, very recently, that many of them are engaging quite deeply on the data agenda. I want to mention mostly the experience we've seen are largely with the multilateral development banks. And you may understand, they do huge projects. They do projects that cut across countries, and so for them, the macroeconomic component is very important. And so you'll see the AFDB, for example. I'm so happy to hear they're going to be taking on the African Natural Capital Community of Practice Secretariat. But they have done significant work on natural capital accounting. Why? Because for them, what we've seen is that for them to fund projects, then they need to have the baseline data. They need to understand, various ecosystems, so that as they're doing their project assessments, then they're able to incorporate that very well within their models. So there's that one, and then there's the European Bank for Reconstruction and Development, EBRD. For them, what they have done is that they have developed a specific model based on natural capital accounting. And why is this? Because some of the financial data that you have, the traditional data will not assist in the assessments that are required for some of these huge projects, and especially where projects are cutting across various ecosystems. You have a project cutting across the Congo Basin, for example. That's a huge basin. And so then a clear understanding of natural capital, a clear understanding of the ecosystems, the value of those ecosystems, then helps with analysis. So EBRD has done a lot of work when it comes to developing their own models. Now, what we want to do and what we are committed to, I'm about to finish, within Anchor, is we want to support financial institutions to fully begin to integrate or to use natural capital accounting data as they should. So that means financial services are now going to begin to understand the kind of data that they can get from the excellent work that has been done by statistics agencies. But at the same time, also to help these agencies to understand what financial institutions need, so that it goes both ways. And then at the end of the day, whatever is produced in terms of statistics and data becomes usable for financial services. But at the same time, like you said, we hold a lot of, and I say we as financial institutions, hold a lot of data. how can we then work and close the loop in such a manner that we're able to share the data that we have, but more importantly, get the data that we need to do our assessments.
Thank you very much. I think that's quite a key thing for Sandy and the NCA team community of practice to really start looking at, is how do we have that data flow to and from. And I think it speaks to the model that we showed up in the presentation earlier, is that it can't just be a one-way flow of information. It has to be both ways so that we can learn and share with each other. So thank you very much, and also congratulations to Anchor for the work that they've been doing. And then the challenge, I think, to all of us is how we're going to have some African examples. Because you mentioned two, but none of the examples that we can use here on our continent. So I think it's important that we can reflect on how we can take the work forward. Great, thank you very much, Dorothy, for that. Next I'm going to move on to Johan. Johan from Nedbank side, the corporate and investment banking. To what extent is nature being considered as part of Nedbank's financial decision-making and strategy? And then maybe you can also reflect a bit broadly, what role do private financial institutions play in promoting biodiversity conservation, and how can they leverage that influence? Thanks.
Thank you, and good morning all. Pleasure to be here, and thank you for the discussion so far, really insightful. And just a quick comment on what you said now, Dorothy. So no pressure on banks then, from a South African perspective as well. But actually there is a lot of pressure, and I think at Nedbank we really do understand the impact and influence that we have on nature, and of course that nature has in our business. Because to my fellow panelists from the South side perspective as well, it's all linked to the businesses, right? So we are supporting financial flows to businesses to be able to do their operations, employ people, of course receiving income and then value to shareholders, but all of those businesses indirectly or directly depend on nature in some way or form. So it's really trying to understand that, to get the data to motivate how we include that in our financial models. So at Nedbank we've done a couple of initiatives to better understand nature firstly, and I'll just mention a few of those. So firstly, from a risk assessment perspective, we've also done a pilot project on the task force for nature-related financial disclosures, and there we focused on some sectors first, because of course we have quite a few sectors that we cover. We want to cover the most important ones first, so we focused there on the agricultural sector, so to really understand what is the impact and the dependencies of nature on our business, and then our business on nature from, let's say, an agri perspective. We've done a similar exercise, but at a higher level on our property finance portfolio, so looking at the geolocations of assets and where they are located, with regards to different nature potential hotspots around biodiversity, and seeing what the impact there is, and then trying to of course measure it and take it into account in future decision making. Then, as part of our corporate investment banking loan process, so to your point about the loan decision making, so we have a team called the Social Environmental Management Team. So they also have a system where they have certain exclusions or priorities to different categories of risks in general, but specifically focused on social, and also of course on nature. So here we're talking about things like protected areas, water scarce areas, and things like that, to make sure that we don't do harm to those areas. And then also on the positive side, where can we identify opportunities to protect and conserve. So that's from a risk management perspective. Also, it's in our climate risk appetite statement, where we've added some of these exclusions, and also again the link to pro-nature projects. Then from a product perspective, so I'm in the Sustainable Finance Solutions team, as you've mentioned, and here we are looking to really include biodiversity-related, whether that is key performance indicators or use of proceeds categories, into our existing loan offerings. So, of course, a lot of work has been done on the green finance space, as you've alluded to, from, let's say, green loan, green bonds perspective, sustainability-linked loans and bonds. But now also, how do we bring in biodiversity-related key performance indicators? And how do we bring corporates to the party by helping them to focus on the things that they understand already, which could be providing training to employees in biodiversity or conservation, where that corporate has a specific impact. It's on quite a big land area. So starting small, but ultimately trying to get to things like species abundance and nutrients and of course soil. So we are of course a long way from that, but that is the ambition. And then just lastly, from a strategy perspective, so proud to say that Nedbank at the start of this year put out a nature position statement. So in this statement, we have defined our approach to nature. We have set out that we commit to certain things around nature, understanding nature, integrating that as part of decision making, as I've alluded to. And this approach is really built on the global biodiversity framework that we've talked about. It's also built on the South African National Biodiversity Framework and the action plan, as well as the TNFD. So those are a couple of initiatives that we have, and how we plan to continue making a positive impact. And then to your second question, if I'll continue down that line, so I hope from this answer it's also clear how financial institutions play a pivotal role, and of course we need to lead by example. Some corporates are already doing quite a lot, but as banks we also need to set the example by understanding materiality, understanding the risks, understanding the opportunity, and then helping corporates to get there to help drive positive change. So again, from promoting the biodiversity perspective, a couple of examples of things that we've done is the Worldwide Fund for Nature, WWF partnership that we have with them, and this Nedbank has had for the last 30 years already. And through this partnership, we've supported more than 300 million rand of biodiversity or nature-related programs. So this is around, I think, 19 protected areas that we've supported. It also includes the conservation of different species, for example, conservation fees for support to the black rhino, to the blue crane, etc. So we've done quite a lot of work with the WWF. And then through that partnership, there's also the education piece. So we've done a guide to landowners on, for example, gum trees and bees and biodiversity, and that was published in 2022. So really to get landowners to understand the impact that they can have through nature also on let's say, the land that they own. So that's one example from a, let's say, WWF perspective and what we've done with them. And then another example is through the carbon offsetting that we do. So of course, as Nedbank, it's publicly available as well, our commitment to carbon neutrality by 2050. And as part of this, we also rely on carbon offsets. Of course, we focus on our own operations first, reducing carbon emissions as far as we can from an operational perspective. But then also rely on carbon offsets. And one of the projects that we support is the Marika forest in Madagascar, and that project specifically focuses on sustaining the forest from a biodiversity perspective, but also then providing support to the local communities and the landowners for supporting the social piece around it. So those are some of the examples of how we're promoting biodiversity, apart from attending forums and conferences such as this, and working with ANCA, working with the WWF, working with Sustainable Finance Coalition, etc., to drive change and to make a positive impact.
Excellent. Thank you very much. I think you covered quite a few of the key things that we in this community of practice is really interested in. And so I'm really pleased and excited to hear that Nedbank is really forging ahead in some of the work that you've already started. So excellent. Thank you very much. So next up, we'll move to BASA, the Banking Association of South Africa. Yassine is the senior specialist there. So Yassine, can you just explain how BASA is collaborating with the Task Force on Nature-Related Financial Disclosures? We've heard quite a lot of the panelists brought it up. So we're quite interested to know how BASA has been engaging with TNFD and how to advance sustainable financial practices. Thanks.
Thank you, Dashni. So BASA was approached actually by our members to become the task force for nature-related financial disclosure, to be a convener of what they call the South African Consultation Group. So basically the consultation group, or consultation groups, is a regional groups that have been set up around the world. So I think there's about 12 in total now, to give some local context or local flavor to the framework. So we were approached by, as I said, our banks, and at the time we decided that BASA, as looking after the banking sector, shouldn't convene this platform alone. I think, as we heard from our panelists, or as a panelist alluded to, in the nature space, in the broader sustainability space, collaboration is key. So we took the decision at the time to broaden to have a broader reach from the consultation group, to approach the National Business Initiative, so that we don't only target financial institutions within the consultation group, but also to reach out to that real economy, or the real economy participants. And we've seen that in the panel, that it's very important to have that dialogue. So let me speak more to the consultation group. We're still in the process of establishing the consultation group, but basically what we want the consultation group to do is to create awareness in South Africa around the TNFD, and then secondly, also to understand what are the issues South African financial institutions and companies are facing with adopting and implementing the TNFD, and then structure this consultation group so it speaks to unblocking those challenges. And then I think there's a third aspect which is critical as well. By having a South African consultation group, it allows us to have a voice in this framework, in this larger framework that's being rolled out globally. And it's very important for South Africa to feed back, and global South countries to feed back and to provide their inputs and context on how we are addressing nature challenges.
Excellent. Thank you very much for that. So I'm just checking my time. We do have time for a second question. So I'm going to be moving on to second questions and then I'll just do the final round. So Santesa, I'm going to move to you. What measures has the Reserve Bank been taking to integrate biodiversity considerations into its regulatory and supervisory frameworks? And I'm going to ask you all to be a bit brief, so that we can get the third question in, if that's okay. Thank you.
Okay, I'll cut down. Yeah, I think we just got our footing on the climate-related financial risk stuff, and I think we're building momentum towards biodiversity, and it's just the way things unfolded in the global policy space. Unfortunately, we started with climate, and then nature became a huge part of that. But in fact, climate and nature are intrinsically linked, and it shouldn't be seen as two separate topics. But let me talk about what the South African Reserve Bank is doing, specifically our PA. So we're thinking about integrating biodiversity loss or biodiversity risks into our frameworks or our risk assessments, I'm going to summarize it into 3 key questions. So you can think about it, think of it like a flow diagram. I feel like Kamala Harris, because if you're watching her video, she talks a lot about her love for Venn diagrams. So I'm going to talk about my love for linear flow diagrams here. But anyway, the first question is, does biodiversity risks pose material threats to financial institutions, safety, soundness, and stability of the financial system? Okay. The second question, and I think Dorothy here alluded to traditional risk assessments. So the second question is financial risk not already being captured in our current risk assessment frameworks? And is there scope for regulatory intervention? Now, for example, Nedbank spoke about their agri-loans. So when banks make loans to the agri-sector, for example, they do include water risks in their credit due diligence processes. And we know this because there's a CDP water disclosure reporting framework in place. And then lastly, based on what your response is to the second question, if regulatory intervention is required, will this make things worse? Or will it assist in managing risks which banks themselves are having trouble in identifying, managing and monitoring? And when I say make things worse, we all know that regulations can come with compliance costs, they come with the need for extra resources and capacity. So that's what I mean by making things worse. And then also, we can think about it from an international finance perspective. Will these regulations, for example, divert international finance away from South Africa? So that's another angle that we need to think about. So, what are we doing? Okay, I'm getting to the question now. Like I said, we started with the climate, so we have undertaken several measures to understand the impact of climate-related risks on financial institutions, notably our systemically important financial institutions, the banks and insurers. And we followed a very simple approach, and then what we can do is we can then expand on this to start including biodiversity loss. So some examples is, I'll apologize to Nedbank for this because I know they usually complain about surveys, but we do send our banks and insurers a lot of surveys, and a shame they have survey fatigue, but it's necessary. And we do this to create industry awareness and to also assess how they respond to risks. We also have PA or Prudential Authority communications that go out that notify banks and insurers of our supervisory expectations. We have board level engagements that take place with industry. And recently, the Prudential Authority published 4 guidance notices for banks and insurers relating to disclosures and sustainability reporting. So that's another way that we can use that to then expand on biodiversity loss and biodiversity risks. And then last but not least, we do a lot of internal capacity building and expertise across the board. And I think I'll stop there.
Thank you. And I think that's also linked to your what you shared earlier around the course that you do for policymakers. I think quite a lot of linkages, maybe getting this community of practice to input into that course or even take some of those courses. So thanks for the capacity building initiatives that you are involved in, or your organization is involved in. So next, Dorothy, just a question for you. What are the key challenges faced by financial institutions in Africa? And when it comes to mainstreaming biodiversity, how can we address these?
My first response answers the question on will regulation make it worse. Regulation is necessary. and this is necessary because from what we have seen, if there is no supportive regulatory environment, then it becomes very difficult to mainstream some of these things that we're talking about. And I want to mention why I say regulation is necessary, or policy is necessary, is because you may just have seen and I'm talking from a business, real economy and financial services sector. You may have seen the IFRS has come up with standards, international financial reporting standards, have come up with the ISSB, International Sustainability Standards Board. So going forward in a few years, then financial reports will have to actually have climate disclosures and nature-related disclosures. You will see that the ISSB has incorporated what they call S1 and S2, I think it's S1 and S2 standards, and these are on climate, climate disclosures. They have promised, and we are very happy, and I'm so glad to see Candice Dot here from TNFD. She's seated right at the corner up there. So they have just indicated that they're going to think through and they will incorporate TNFD standards when it comes to nature. And what does that mean? It essentially means that going forward, in possibly another 2 years, any institution that is reporting or developing financial statements will have to have these standards. Will have to have climate disclosures and later on nature-related disclosures. Now, I say that because at the end of the day, what will support in all this is policy and regulation. So lack of regulation is one challenge, and therefore regulation should ideally not make it worse, but make it better. The other challenge that we see is data and complexity, or cost and complexity of data collection. I can tell you some of these commercial databases are very expensive. And it goes back to what you all said, the cost of compliance. But at the end of the day, if we have frameworks which make the process of collecting this data much easier, then you find more financial institutions and more businesses, because it's not only financial institutions that are expected to report on data, the real economy is also expected to look at data and understand data risks and opportunities. And so that's why you have frameworks like the TNFD coming through to provide a simpler way for businesses, for financial institutions to begin to understand data. Now, I keep talking about the TNFD because for us, it's the simplest way of bringing data into business and into financial services. But I want to explain that from our understanding and the pilots that we've run, and NetBank is a wonderful example of one of the very active pilot institutions, that natural capital accounting data is the foundation. Because if you don't have this foundation, what we're discussing today, if you don't have it set, you will not be able to get the data that is required. You will not get the granularity of data that is required for any piece of work on nature. I want to mention, because of these challenges, one of our anchor members, DBSA, I wish they were here. I don't know if anyone from DBSA is here, but it's public. They released a report in the month of April. We supported them in a report. It's called Nature, it's a report on nature data. And what that report highlights are the challenges they have encountered in looking at data, looking for data, and especially data that you need to pick from projects that are across different ecosystems. And in that report, they have highlighted the processes or the tools and methodologies that they have used to address that specific challenge. And so what we're saying is institutions are coming up with ways of going around it, ways of going around this challenge, and they're actually sharing that information with us so that we all learn. And that's the information that policymakers, statistics bureaus need to also look at to help develop new data sets as we work towards more accounts within the subject of NCA. So cost is a challenge. Then the last challenge that I want to talk about is attribution. And this is where a business says, I mean, I can't attribute pollution or whatever damage to my business, especially when you look at it downstream or through the supply chain. And it's systems and methodologies such as the NCA that we talked about yesterday that helps, align cases of attribution so well to the extent that now a business can actually fully understand the value chain, its supply chain, its effects on nature, and how nature also affects it and affects how it carries out its business. And so these methodologies are very critical to the entire, running of businesses that we see.
Excellent. Thank you very much for reflecting on how interdependent we are, the biodiversity sector and the financial sector, because we need methodologies, we also need data, and thanks for also highlighting the need for partnerships and collaboration. I think that is key, and we're seeing it happening in the financial sector. And how do we leverage off that? I think that's important. Thank you very much, Dorothy, for those nuggets. Johan, I'm gonna ask you. So, what is one of the specific challenges you have experienced, or you can foresee, in mainstreaming biodiversity into the financial sector? So, our discussion today is really about how do we mainstream biodiversity into the sector? And if you can just highlight what you see are the specific challenges. Thanks.
Perfect, thank you. And thank you, Dorothy, for setting the scene around challenges. So it's really around standardized data, the measurement, and then of course the assessment of that, because ultimately as a bank we rely on data and we need to measure risk, so therefore we also need historical data to be able to predict the future as best we can, so that's foundational. But if I have to mention a unique challenge, and this is around bridging the knowledge gap. So bridging the knowledge gap between environmental experts that are experts in their field, they've been in the field for 20, 30 years, they know all about pH levels and soil and whatever the case may be, very specific, and bridging that gap to financial experts that most of them don't know too much, or don't know a lot about nature, and we're learning. So it's really bridging that gap, making sure that things like this happen, to speak to each other, to learn, to see how we then integrate and kind of come up with projects that is understandable from an environmental perspective, but also understandable from a banking perspective and makes sense from a financial and commercial point of view. So bridging that knowledge gap, I think, is a challenge, but lots have been done on that already, and as you could hear from yesterday and today, it's really exciting to see what is happening.
Great. So as we conclude the panel discussion, so we will be taking questions from the audience after this. So Yassine, just to kind of pull everything together. So we've heard quite a lot about the challenges faced in promoting biodiversity mainstreaming into the sector. And if you can just reflect on what strategies are being employed to overcome these challenges. And I guess you would reflect on it from from the members that you support. But really looking at giving us some solutions. Thanks.
Thanks. I think if you look at the South African banking sector, I think I would say it's very progressive. We didn't have to go to the banks and raise awareness. The banks came to us, to the association, and highlighted that nature is a priority and that bosses should take the lead. So from that point of view, you have, and this is our major bank, so you have 90%, which covers 90% of assets that are looking at nature risks. The issue, and then maybe just touching a little bit on challenges, the issue is with the smaller niche banks, the tier 2 banks, However, they don't play in the commercial space, they're more in the retail space, so that gives us some time to understand how that risks, the nature risks affect them. So I'd like to then, when we're talking about strategies, build on Dorothy's question, answer to question one around regulation. Yes, we as an association believe that regulation is important, it's critical, but it's the pace of regulation. And that's then central to our strategy and our engagement with the regulators, to give them an understanding of where the sector is and the differences across the banks. So when we're engaging, we'd like to you know, and this is an international trend. We also, it's something that we believe in, is that we have to move from the voluntary, from the TNFD, which is a voluntary framework, ISSB, to a mandatory, and that needs to be done over time so that we can build systems to collect the data. We can engage clients on what we as a banking sector, you know, what's our needs, and also take our clients along on this journey. So I think that's a critical, and that's probably how we structure our strategy.
Thank you very much for that, those inputs. So I'm now going to open up to the audience. I'm happy to take some questions. We've had quite a great, diverse group of panelists this morning. So yeah, I'm keen to see who wants to ask questions. I'm looking on this side. Don't see any hands. I see one in the middle. And then the last group. So just remember, they put me here for a reason. I know many of you. So I will ask you to ask a question if you don't put your hand up. So, great. Let's go. Robert?
Thanks. Good morning. Thanks for the discussion. So this is going to the, I guess, banks as a financiers of most of the operation industry. How are you tracking, or are you beginning to track how much of the money you give out is contributing to net positive or net negative investments? Is that something that's part of the discussion? Thanks.
Thank you for the question. Difficult question, but I do have an answer, luckily, because of the nature possession statement that we put out. So we have put a timeline on it that by 2026 we would be looking at nature-related impact as part of our transition plan, and what we would call nature-related impact. So similar like for climate change, you would have financed emissions, so it would be nature finance basically. So, or the impact on nature activities, both from a positive and negative perspective. So it is part of the plan, but still a way to get there, given that we've just recently made our commitments on financed emissions and specific glide paths towards, let's say, 2030 and 2050 targets for specific sectors. So we still need to cover all the sectors from a climate change perspective and then get to nature. But it's part of the plan.
Could I just answer? Not a bank. We are not a bank, but we have a fund for nature finance, and so in a way we are also capital, you call them providers. And so within Anchor and within FSD, we have two funds. One is what we call the Carbon Accelerator Program for the Environment, and it seeks to do exactly that. Move finance into at least 3 to 5 carbon projects within a 1-year period. Of course, we expect from next year onwards the fund we should be able to support more. We also have what we call a natural capital financing facility, which is the investments arm of FSD Africa. And what we do there is actually now to invest in projects. So we provide either debt or equity or sort of blended finance, or even guarantees for financial institutions to actually invest in nature. And we have specific targets over a 5-year period, and we track that. That's how we measure our success.
Thank you very much, Anchor, for Dorothy, for sharing what Anchor is doing. There's 2 questions, Sapang and Simon, on the top there. Thank you.
Thank you very much. And my question is to the Reserve Bank, in particular on nature disclosure and reporting. And I would like to find out, in your view, where should that work be institutionalized? Is it National Treasury or is it the Reserve Bank? And if it's, of course, we have been engaging with the private sector in terms of how the disclosure can potentially be done. But I think we now have to move, by the way, from the Department of Forestry, Fisheries and Environment, and I coordinate the work under the Convention on Biological Diversity, in particular the Global Biodiversity Framework. So we have that packet on disclosure. So I'm just trying to find out what will be the best institutional arrangements. And I'll just speak with you during break to see how we can then operationalize that. Thank you.
Okay. Should I go this?
Yes.
Oh.
You can go ahead. Let's take both questions and then I'll hand over to Lisa.
Okay, no, thank you very much, Deshni, and to the panelists. My question is around the issues around transformation, because transformation is very, very important for us at the Department of Forestry, Fisheries and the Environment, given the history of South Africa. So I want to ask, what is the private sector doing to support the previously disadvantaged communities in the biodiversity sector? And I'm asking that question in the context that if we are doing all this work that we are doing and we are not taking along our people, we are going to face challenges. And our people are losing patience with us because we seem to have all these nice discussions, but they don't see the benefits of what we are doing on the ground. And that's the basis of my question. And I think maybe the bench will be the most relevant to respond to that. Thank you.
Great. Thank you very much, DFFE, for those questions. I'm going to hand over to the panelists to, are you going to take, Santesa, are you going to give it a try?
Yeah, we can talk more about it in the break. But to just give you a very direct and simple answer, we are guided by our mandates. And the mandate of the Prudential Authority is to protect the financial integrity of financial institutions. So when it comes to disclosures, sustainability reporting, supervisory expectations thereof, it's going to be guided by that, the financial integrity of financial institutions. And in terms of the role that the Prudential Authority would play versus the National Treasury, we have really strong collaborative efforts, and we have something called the Intergovernmental Sustainable Finance Initiative, where we all sit together. I think BASA is also part of it, right? No. Where we come together and we discuss and we deliberate and we think about what's the best approach forward. But on nature biodiversity, it's yet to be done. We are still expanding on it. Yes, 2 minutes. It will eventually come about, but we are still tinkering with the processes right now.
Excellent. Thank you very much. I mean, you've given us another kind of platform that we can tap into as this community of practice. So thanks. Is it Basa, or are you going to, who's going to take it, Johan or Yassine?
Can I have a stab and then I'll
Sure,
give it to you?
great.
So I think maybe a comment on both questions. On the first, BASA is part of what we call the Sustainable Finance Initiative, and that's a broader initiative that brings together the financial industry as well as the regulators to discuss these issues. And then the platform that was earlier referred to is the Intergovernmental Sustainable Finance Initiative, which is also influenced by the Sustainable Finance Initiative. But maybe the comment in that space is just to say that we view alignment as critical. We know that there's different mandates, but there needs to be some form of alignment, in particular in aspects of disclosure, because that will help the data flow much better. And then on the second question, on the issue of transformation, I mean that's critical. We view that you can't address the environmental issue without taking into consideration the social issue. And a lot of these frameworks come from the global north, and they focus on the environment. It's very important for South Africa to put that social lens on it. And we're part of a platform called the Sustainable Banking Finance Network, which is a international platform for the global south to address issues and concerns around around global south problems. And one of the working groups that we're looking to establish is around the merger of sustainable finance and financial inclusion. And this will look at particularly how do we look at environmental issues, climate issues, and look to bring the people along with us on this journey. A lot of the time, if you're talking about climate finance, nature finance, there's this particular, it's aimed at it's more on the commercial side of the bank, more on the investment side of the bank. How do we bring that to a retail level, and how do we incorporate SMEs in this discussion, and then products that speak to people at the local level. So very critical to addressing this issue.
Excellent, thank you. And thanks for that challenge, Simon, because it's important. We can't just be talking to ourselves, we need to be bringing everybody. And I think important because South Africa is also going to be hosting, will be having the presidency of the G20. And if you look at how the engagement groups are set up, in that there's lots of different work streams and engagement groups just to have some of these conversations. So important for us to bring everybody along. So any final comments, closing comments? I see we're almost at time. Oh, actually got a stop a sign given to me by the timekeeper. But if you can just indulge us, just a final round, please. Thank you.
Yeah, mine is on the training awareness. I just want to mention that we are setting up, or we have set up what we call the African Natural Capital Alliance Fellowship Program on nature finance. We are going to work towards supporting 20 African change champions in a one-year program that will take them to the African Leadership University in Oxford, fully funded. The only thing that we need you to pay is air tickets. But everything else, accommodation in the program is fully funded. And I want to place that call to policymakers and regulators, because we are going to open a couple of slots. So when it's out, please, if you can, please just apply and let's hope you can get in. Thank you.
Excellent, thank you. Yassine, you've had your last chance, but if there's anything you want to say, and then I'll move to Johan.
No, just short thank you to the organizers for having this conversation. I think it's critical to a mainstream, biodiversity, sustainability in the financial sector. So thank you very much.
Great, no, great having you here. Johan, any last words?
I'll just say I'm looking forward to discussing more with each of you around projects and ways that the financial sector can support, and thank you for the opportunity to be here.
Excellent, thank you. Santesa?
I think I want to conclude with two takeaways, and that's in relation to the last question. I think policy coordination is so important to get this work going. And recently the Climate Change Act came out, and now it's given permanent roles to institutions that didn't have that, like the PCC. So very excited about the work that's going to come about. And then also the partnerships between policymakers and the private sector and supporting institutions, so important. We work very closely with Encore, with WWF, with NGFS, which is the Network for Greening the Financial System. Our Deputy Governor Fundi is actually the Vice Chair of that, and various other ones that I won't mention, but you spoke a lot today about G20, and I lead on the Sustainable Finance Working Group, which is part of the finance track. And one of the key themes that we're looking into is adaptation finance, specifically pushing that more into the transition plans of nationals and of corporates, and bridging data gaps, and then also looking at insurance protection gaps, which is another very big topic that's coming out on the global stage. So I'll stop there.
Yes, thank you very much. So just for Stats SA, Sandy, and DFFE to note, there is a call to action here. How do we coordinate our policies? And then, of course, look at how this community of practice can really start engaging with the financial sector. We've heard from our panelists, they're ready, they're busy with a lot of initiatives, and now it's our chance as the biodiversity sector to really take that forward. And so thank you very much, panelists. Really great having you on the panel this morning. We are going to move to tea, and then after tea, I'll hand over, we'll be back here. Hey, after tea. Great, thank you very much.